And of course, it's time to do business here on Joy News Prime with me, Beverly Broom. Fitch Solutions is forecasting that the Ghana Cedi will end 2023 at 11 cedis 40 pesos against the dollar. This is lower than the 12 cedis 40 pesos predicted earlier in the year, at a time Ghana was yet to reach an agreement with the International Monetary Fund for a bailout package. Here's more.
The UK-based firm is also projecting 10 cedis 90 pesos to $1 in 2024, fueled by expected inflows from the International Monetary Fund program and improved investor confidence. The local currency is presently going for 11 cedis 53 pesos to the dollar in the retail market and 11 cedis 5 pesos to the American greenback on the interbank market. Since Ghana secured the IMF bailout package in May this year, the local currency has remained relatively stable against the dollar and all the major foreign currencies. Fitch Solutions explained that while short-term exchange rate volatility will persist, it believes that the cedi will stabilize. The forex market was a bit choppy last week as the cedi saw some volatility against the US dollar. This is despite the Bank of Ghana announcing plan to auction $120 million in its forest forward auctions for the bulk oil distribution companies during Q4 2023.
Now, research leader GCB Capital Courage Buti says the relative stability of the cedi against the US dollar from the beginning of the year is commendable. He continued that inflation could recede by the end of the year if revenue intervention on inflation is dealt with sufficiently. He spoke earlier on Business Live.
Well, it is a good news, but then again, we need to know where we came from. We came from in 2021, a cedi dollar exchange rate was just around 6 cedis to where it is now. So while closing around 11.4, 11.5, thereabout would have been remarkable stability, we recorded more than 20% depreciation in just the first month of the year. So end of year depreciation wouldn't have been 0 or even single digit. It would have been 20 plus depreciation of the cedi versus the USD really. So we need to put it there in that context. But after January, it's been relative stability, which is quite commendable, and that trend should continue. And if we see it that way, and then the food price pressure issues are dealt with, and then the impact of the revenue interventions, the tariff interventions on inflation, if they are dealt with sufficiently, we should begin to see inflation also recede along the year, especially in the Q4, where the base drift effect will be a bit more pronounced.
Of what impact has the IMF contributed? When I say the IMF, I mean the IMF deal contributed to this appreciation we are likely to see at the end of the year.
Well, the IMF gives you confidence. It gives investors comfort and confidence about the economy. And you could see first half of the year numbers as shown in the the half-year review in July, that we are running deficits that are way sharper than what the target for the period was, or significantly below what the target for the period was. We're running a primary balance significantly below what the target for the period was, and you could see a general sense of commitment to fiscal consolidation. Now, that is what the IMF gives you.
Banking and financial consultant Christian Techijan has welcomed government's decision not to touch treasury bills as part of its debt restructuring. Minister of State at the Finance Ministry, Dr. Mohammed Amin Adam, earlier made it clear that T-bills are not part of the scope of the debt restructuring program. According to Mr. Techijan, any attempt by government to touch T-bills will affect government and the banking sector at large. He spoke to Joy Business.
But the Minister of State at the Finance Ministry, Dr. Mohammed Amin Adam, on PM Express denied that government is solely using funds raised from the treasury bills to finance coupon payments of new bonds. He explained that government has been using other sources of funding to pay these new bonds. Now, reacting to questions about government's intention to restructure treasury bills due to growing interest cost and the amount borrowed, Dr. Amin said there are no such plans.
No, I mean, first of all, you know that the T-bills we launched in December was very successful, 85% participation. So if we are reopening for the
that is the direction program.
Yes, it doesn't mean you are doing another round of exchange. You cannot equate that to another round of debt exchange. Okay. Secondly, I've just indicated to you that the cocoa bills and then the US dollar and the alternative pension that we are doing are heading towards a great success. The information we have is that we are going to perform over 90% of that. So if you open even in future, it is for the residual, you know, it's for the few that are left, but not to go around doing another DDEP. As far as the assurances about T-bills, I don't know how many times you want me to answer that, but let me just take the opportunity to repeat it. We are not going to do DDEP with treasury bills. Treasury bills must be risk-free. Treasury bills will continue to be a source of revenue for government, a major source of revenue for government, in addition to the other sources that we have. And so people must be assured that we are not coming back to ask them to sign on to anything.
Meanwhile, banking consultant Christian Cedi Jan described the move as one to save the economy.
Government in itself, the governance machinery is going to run at a short, and it means the governance machinery will be grounded, and government cannot afford to do that. We are expecting the second tranche of disbursement from the IMF. That alone is not enough. Government has been shoring up its cash flow with the T-bills, proceeds from the T-bills, and so it cannot afford to do that. And once they want to touch it, already they've set up the sustainability funds, where some commitments have been made by the development partners of the government, as well as some government commitments as well, to help the institutions that will run into liquidity challenges as a result of the domestic debt exchange program.
Some market observers have raised concerns about the amount of funds raised by government on the treasury bill market in the second and the third quarter of this year. Government has been constrained in raising funds after Ghana was restricted from going to the international capital market to raise some monies due to bad ratings. Government is planning to raise about 39 billion Ghana cedis in treasury bill market in the third quarter of this year.
Now, energy strategist calls for more investment in Ghana's oil field to propel greater prospects in the country's upstream petroleum sector following the commissioning of the first oil from the Jubilee South East project. President Akufo-Addo last Friday commissioned the project to be undertaken by Tullow in collaboration with the Ghana National Petroleum Company, Cosmos Energy, Jubilee Oil Holdings Limited, and Petro SA. Government is hoping the project will maintain production above 100,000 barrels of oil per day by the end of the year. Let's get the perspective of energy strategist Dr. Yusuf Suleiman on this, and he joins us via Zoom. Thank you so much, Dr. Suleiman, for your time. This is a great deal for the upstream sector, but how do we ensure we optimize the full potential of the Jubilee South East project?
Yeah, thank you very much, and good evening to you, Beverly, and good evening to your channel's viewers. Yeah, indeed, Jubilee has always been Ghana's cash cow. It had dwindled a little bit, and that's normal for most producing wells. After a period of time, let's say after a decade, we'll do have what we call a plateau and a decline. And so if you look at the value, the figures that were churned out for the last 2 years, we actually saw a decline. And so to the effect that some investment had gone into the partners, they have done creditable well for pouring investment into those fields. And like I said, Jubilee from beginning has always been the best. As I speak now, is doing like 70,000. So with this amount of oil pouring into the basket, into our production basket, we'll be doing like over 100,000. And if we stay the course in that way, we will hit high in terms of our production portfolio. So far our upstream is concerned. But you ask a very good question. How do we optimize that? Indeed, yes, what it takes to stay on this trajectory is what I call continuous investment. In upstream, windfalls will come, and this is a spectacular example of what I call a windfall, because oil prices are pretty high as we speak, Beverly. We have it around 90s. In fact, it's supposed to be it's flattened around the 90s, and it stayed there for like almost few days now. Now, assuming it stays in that trajectory, and all indications are that OPEC is still holding on to the supply cuts, so all indications are that oil price will still be high. So if you remember, 2022, we have so much coming into our coffers. Meanwhile, our volumes actually decline. So with this boost up in volumes, let's say Jubilee alone doing about 100, ENI will do like 30. I'm talking about 100,000, 30,000, and then 10 fuel will do like 20,000. That's about 150,000. That is huge. And so what we need to do, first of all, continuous reinvestment to make sure that all other fuel will unlock the potentials of all other fuel. And secondly, we try to look at ways of cascading windfalls. I always mention that we have a peculiar situation. As much as we are benefiting from the upstream, Beverly, you know that you will notice that downstream will be a different story altogether. The pump price will be getting hotter as you go forward. So what we need to do, we have to come up with a clear strategy so that as we are benefiting from the downstream, upstream, we shouldn't have the negative effect being felt on the downstream territory. Otherwise, whatever benefit we have from the upstream, we might end up vaporizing it at the downstream side. Beverly.
Right, but what's going to be the impact of this, not only in the upstream sector, but the oil and gas industry as a whole?
Yeah, so that's a huge impact. If you look at, we had 3 fields, we had 3 fields running, and almost like a couple of years now, we haven't had any additional field coming. That we began to get so worried, And if you look at this quantum that is coming in, it's almost like the full capacity in terms of oil production in ENI field. So that is huge. And so what it will do is that it will drastically scale up our revenue, in terms of what we get from the fields. So yes, that is huge, and it's huge to the extent that if you look at oil prices, I just mentioned that the oil prices are pretty high, and as long as these prices stay in this trajectory, and we suspect that it will stay in this trajectory, then we will have a lot of benefit that is coming to the to the industry. Yeah, Beverly.
Right. Thank you so much for your time here, Dr. Yusuf Sulemana. He's an energy strategist. Now, moving on, Ghana's ability to export more and participate in global trade is badly being affected by access and cost of credit. This was captured in the latest World Trade Report released by the World Trade Organization today. My colleague George Riafe is in Switzerland and has more on this.
The World Trade Organization's 2023 report showed that banks in Ghana did finance about 25% of the country's total trade. This is making it difficult for Ghana to realize the full benefits that comes from participating in global trade, so as deals that we have signed with some multinationals and developed economies. The report showed that Ghana could have gotten more from these trade deals if they had secured the required funding from these commercial banks in the country. It also came up that there was a high rejection rate when it comes to funding small businesses, so as enterprises that are owned by women. You spoke about trade expansion in Ghana being affected by access to credit and cost to credit. Help me out. Does it mean that Ghana is struggling to get funding for trade? What does it mean?
So that's a very, very good question, and what you have to see is that trade is a very finance-intensive business, because all these goods that you ship have to be financed somehow, either by the firm selling it or by the firm or the retailer buying it. And of course, for this to work, you need a developed financial system, and what we've shown in various reports is that it varies a lot by country, but trade finance overall in Africa is not as well developed as trade finance, say, in North America, and that contributes to these high trade costs that we are measuring, and would be kind of fixing this would be an important supply side response to stimulate trade.
And finally, so how does policy measures or actions by government address this challenge when it comes to this trade cost and access being a major challenge to trade finance in Ghana? Should it be a policy issue, or should it be a financial issue, or be more of a central bank intervention?
Well, I think you need to really look at the local situation. So it's hard to make blanket judgments. But the first thing you need to ask yourself, is there some sort of market failure? So is there a reason why perhaps private banks, private financial service providers are not offering this kind of service? And if not, then perhaps step in as a domestic government, perhaps together with the international community. Yes.
From the negotiation room at the World Trade Center in Geneva, this is George Yaffe reporting for Joy Business.
Now, former Finance Minister Seth Terkper is urging government to work assiduously to improve the economy beyond the expectation of the International Monetary Fund. Now, according to him, even though there's much focus on fulfilling the IMF conditionalities, government must ensure that the economy recovers fully and becomes stable post the IMF program. He spoke on Joy Business.
We were already implementing many of these measures, which I enumerated already, from taking off excessive, what would have been a rollover of the first sovereign bond, what would have been, stabilizing, what would have been worse situation if we didn't have 250 million, upfront to tackle COVID immediately before even the COVID, loan, could come on board, right? So, in terms of what we did at the IMF program, I would say that we did more. We achieved, what we said we achieved by way of, budget deficit, 6.1. It was 6.5 or 6.7, but we achieved 6.1. We achieved zero, financing, right? When we could have done 5%, but we went beyond that, right? So you are comparing that to major challenges. A financing of the deficit in excess of 30%, almost the entire, deficit amount, monetization of the economy and the rest. So this is the context in which I said that, even if what are in the IMF program were achievable, we should look beyond, to leave a good story after the 3 years of the IMF program, which will fall in the lap of another government.
Now, the government has assured that it is working to return the country to economic stability in order to meet all the convergence criteria for the implementation of the common currency, ECO. The currency, which has been in the pipeline for more than a decade, is faced with many implementation challenges, including high inflation and unstable exchange rate system by member countries. Speaking to open the 53rd Technical Committee of the West African Monetary Zone meeting in Accra, Chief Director of the Ministry of Finance on behalf of the Finance Minister Ken Ofori-Atta assured that Ghana is still on course for the West African Single Currency Project.
Government is committed to bring inflation under control through prudent monetary measures, including the elimination of monetary financing of the budget, as well as the ongoing fiscal adjustment. These efforts are securing stability will greatly enhance the prospects of economic integration in the sub-region. Monetary policy remains forward-looking with a view to firmly anchor inflation expectations, restore and maintain price stability, and create conditions for inclusive growth. Specifically, we are determined to stay inflation back within the medium-term target of 8+2%. Distinguished delegates, let me take this opportunity to reaffirm Ghana's commitment to the ECOWAS Single Currency Project. Despite our recent economic challenges, Ghana's performance on the harmonized convergence criteria has always been above average. We assure you that these challenges will be reversed and sustained economic stability re-established. I wish to extend my sincere appreciation to all the distinguished delegates of the Technical Committee for the collaboration and support during these critical periods.
Now, Senior Advisor, Monitoring and National Coordinator at the Office of the African Continental Free Trade Area, Alhaji Yakubu Yusuf, has disclosed that Ghana's aim is to penetrate all 5 regional blocks of the African continent, which has a market strength of 1.3 billion people on the African Continental Free Trade Area. He pegged the combined gross domestic product to over $3.4 trillion. He noted the country achieved huge success when over 65 businesses were taken to Kenya. Alhaji Yakubu Yusuf made the disclosure at the Upper West Regional Conference on the implementation of the National Framework and National Action Plan in WA. Joy News' Upper West Regional Correspondent Rafiq Salam reports from WA.
The Upper West Regional Conference on the implementation of the National Framework and National Action Plan on the African Continental Free Trade Area, AfCFTA, which is a baby of the African Union, is aimed at boosting the country's trade with Africa. The conference brought together major stakeholders, including municipal and district chief executives, coordinating directors of the various assemblies, officials of the Ghana Revenue Authority, religious leaders, exporters, and members of the garages. Senior Advisor, Monitoring and Evaluation, and National Coordinator of AfCFTA, Alhaji Yakubu Yusuf, explained the rationale behind the regional conferences.
Apart from creation of jobs for farmers, men and women, you also realize that the headquarters of Africa Continental Free Trade Area is in Ghana. And you can imagine if you have this headquarters in Ghana, the opportunities, the benefits that it will bring to us. So a whole lot of these benefits, we cannot actually harness them if we don't understand what it takes to trade under AfCFTA.
He recalled with nostalgia the benefits that the country had when they traveled to Kenya on a market entry expedition with over 65 businesses. Alhaji Yakubu Yusuf disclosed that the aim is for the country to be a trailblazer in AfCFTA by penetrating in all 5 regional blocks of the continent, which has a market strength of 1.3 billion people.
So businesses were taken to Kenya to introduce our Ghanaian products into the East African market, where they also seized the opportunity to do businesses with the Kenya counterparts. And as I speak, we are seriously working on another journey to Tanzania to consolidate the gains that we made in Kenya May this year. You know, Africa is made up of 5 blocks: the North, the South, Central, and East Africa. So we are trying to make sure that AfCFTA in Ghana will first penetrate into these blocks so that our products can be everywhere in Africa.
And that's all for Business Tonight. You can get more business news when you log on to myjoyonline.com/business. I am Beverly Broom. Sports is next with Razak Musbah. Please stay.